This is Adrian Ingram. We are here with some special guests tonight. We have none other than Alison McCarden. She is with American Financial Network. She's been a mortgage loan officer for about 9 years. We have Ms. Letrissa Frieson from Keller Williams. She's an award-winning broker and agent in the Atlanta area, but she services throughout the state of Georgia, customers throughout the state of Georgia. We have Erica Macklin. She's a realtor with eXp Realty, and she also, all of these people serve the clients throughout the state of Georgia. And we also have John Peeler, realtor with RealMax Agents Realty in Covington, Georgia, and he lives and works in Millersville and serves clients in Millersville and throughout Middle Georgia, but sells throughout the state of Georgia, as I said. So thank you all for coming.
Thank you for having us.
Thank you for the opportunity.
All right. We did have some questions that were asked, and we'll take some from Facebook if we get some as we go along. At first, I'm going to ask, tell me about the market. What's the market, the real estate market doing? Can I give me a idea of, is it a buyer's market, seller's market? And tell us what that means. I'll start with you, Letrissa.
So definitely a seller's market in Atlanta. So that means we have less than 6 months of inventory, and market time is less than 21 days in my area. So we listed a house Thursday. We had 5 offers, 4 hours, and that was over 400, which is the luxury market, which is amazing. And today I was talking with Realtor.com. Henry County has only 500 homes on the market. To kind of give you a realm of what that looks like, it's 2,500 agents in the area. So we don't have one house per agent to sell. So definitely a seller's market. If they're listing their home right now, they're getting top dollar. Buyers are being very competitive. Rates are still low. So we are anticipating this throughout summer. So the market in Atlanta is booming, like literally. We've done 21 pieces of business during COVID, which is incredible. It's just to see the traffic still moving.
Are you seeing the same thing in Middle Georgia, Erica?
Yes, in Milledgeville, the market is definitely a seller's market. You know, the part where your buyers really want to get a deal or maybe get a steal, that's just not happening right now. Sellers are receiving multiple offers and they are going with the highest bid. So when you prepare to place a bid on a home that you really, really foresee you and your family being in, you need to come with your A game.
All right. And John, Erica, we missed that last part. Can you finish that last thought?
Oh, sorry.
You need to come with your agent.
Oh, I said, so currently in the Middle Georgia area, it's definitely a seller's market, whereas a buyer typically wants to receive that great deal or that steal on a particular property and feel like they per se won. Right now, the sellers hold all the cards. And if you want that property for you and your family, you definitely need to come with your A game. You and your agent have to come with your A game because sellers at this time are receiving multiple offers on their property as soon as they hit the market.
You want to add to that, John?
Well, I can concur with everybody else. I can just sum it up. The market is on fire.
Facts.
On fire. So that's all I got to say. And COVID-19 ain't got nothing on these real estate season. I tell you that.
Alison, you get to kind of see a broad spectrum in the market. You get a lot of agents that call for mortgages, being a mortgage loan officer. So are you seeing that people are still buying houses right now during the pandemic?
Yes, it's very competitive. Several people are buying houses. We are busy writing pre-approvals And once we give those pre-approvals out, it varies because I'll get calls. Realtors are like, we're trying to put in this offer. We're hoping that we get this offer. And it's more so, keep your fingers crossed. Hopefully this offer will go through. So I'm getting a lot of business. My branch is very busy. We're closing a lot of loans. So definitely the pandemic is not stopping Atlanta or Georgia, really nationwide, from buying houses because rates are low and people are still buying homes.
Mm-hmm.
What is a pre-approval? I heard you mention that. So kind of tell everybody what a pre-approval. We'll talk about, as you bring up some of the lingo, we want to make sure we educate people as we go along. So tell us, what is a pre-approval?
So a pre-approval, that is where a loan officer or a loan originator like myself, we collect your documents. So you come to us and you say, hey, I'm really interested in buying a house. I want to know how much house can I afford? What can I buy? Because as you realtors on the line know, I mean, you really don't show houses unless someone has a pre-approval, because with it being competitive, there, you don't want to put in a house and then the offer falls through and you have to start all over again. So myself, I don't do pre-qualifications. There are two different terms you'll hear: pre-qual and pre-approval. I don't do pre-quals because that means you haven't seen any documents, you haven't seen their W-2s, their pay stubs, tax returns. You're going based off of what someone said. So I may have someone who says, hey, yeah, I make $100,000 a year. And I need to see that you make $100,000 a year by actually viewing your documents, viewing your income, viewing your credit, your liabilities. So we're actually looking at everything to make sure that when you go out with your pre-approval letter that you receive after we evaluate your situation, that you are ready to buy. And once you go through the actual mortgage process, they're just verifying everything, all of your documents, for making sure that it's factual, kind of crossing your T's, dotting your I's. So if we as loan officers do that on the front end, then, you know, we'll have a smooth sailing transaction and you get to close your loan. So that's the main thing about pre-approval.
Very good.
John, tell us, tell us about, she spoke about pre-qualification and pre-approval. Tell us, what is the process of becoming a homeowner? Kind of tell us the first steps in becoming a homeowner.
Well,
So,
like she said,
yeah.
I'm sorry.
Oh yeah, go ahead.
I'm gonna send that one to John. Yeah. Go ahead, John.
Oh, well, like she said, it does depend on if you are, sometimes you have home buyers who go straight to the mortgage broker or the mortgage lender to try to see about getting qualified to purchase a home. But a lot of times and oftentimes, and most preferably, us realtors prefer that you come to us first so we can kind of have control over the way that goes. So typically you have someone to contact you and we redirect them to the lender or the broker who we work with. And we try to get, of course, like she said, the pre-approval done. A lot of times that is hard to do. It ends up being a pre-qualification, but pre-approval is what we seek to get, because that does give you real numbers, real approvals, real credit check, and all that stuff like that. Otherwise, because you do realize that people, they will embellish, you know, their salary, they will embellish their time on the job and all kinds of stuff. So and once you do that, you save you and your buyer a whole lot of time, and just everybody. It's just better to do it that way. It's better to work with a realtor, and it's just we take you on a journey, and hopefully that journey ends at a closing.
Okay, so you talked about the pre-qualification versus pre-approval, pre-approval. We want to make sure that they get a pre-approval. Am I right?
Correct.
Alison?
Yes, correct.
Okay. And that's going to be when they bring their documents and they have actually stated their income with proof of everything that they're telling you, to make sure that everything lines up. able to say how much house they can afford. And Letrissa, what happens from there?
So in my world, we do buyer consultations. Like John said, that sometimes those consultations happen on the front line so that they actually get to work with our partners, because sometimes everybody didn't have a good working relationship. So my lender partner is who's usually available to do my buyer consultations with me. And at that consultation, I kind of let people know this is our opportunity to talk about whether we want to work together or not, right? Because I think energy is everything. I think that at certain parts of the business, buyers need to realize that they don't get to show up at a house, right? The consultation is important. So I get their wish list and their want list, and we kind of pull the properties up to make sure that's durable based on the pre-approval. So once they get a pre-approval, not a pre-qual, we get to know what their budget is. Depending on area, school, we find out the most important hot buttons for them and their families. So that way we know we're servicing them. We're not riding around. We're not doing sign calls. We're not just showing up in the neighborhood saying, check this one. We try to be prepared. So obviously we meet them in our office. We actually meet at my table. We pull up MacBook. We kind of look at things there to see what's on the market. And I do that to set expectations because I think it's something when you look at Zillow and Realtor.com and Redfin, not knowing the 20% down quotations in the fine print of those. You can own this house for $1,200 a month. So we kind of set the expectation properly for them in a consultation. The other reason I have them come to our office is for safety. Obviously, we get a copy of their tag, we get a copy of their driver's license. You know, being single, I've done this now 20 years. You know, we always want to let people know that we have a real business. We don't meet them at Panera. We don't meet them at Starbucks. We don't meet them at the house first. That's actually a requirement. And at that time, we choose to work together. If we're choosing to work together, we enter into our a buyer agreement. And I let them know that's unilateral. You know, they get to cancel that at any time. But as a professional, you know, I know my per hour, you know, rate is no different than going to the attorney to a doctor's office. We talk about the professionalism of it, that we're exclusively working together. And we set the expectations. How do I win with them? How do they win with me? Whether they like text messages, whether they like emails. You know, we want to go through the whole consultation so we don't have to backtrack. And they get a buyer's Bible from us. We give them a Bible of what they should not do. They should not co-sign. They should not buy furniture. You know, they can't go buy a new car. They get all the things that make the transaction smooth from us at that time so that they're hearing me in their head the entire time. They're thinking of doing something crazy. So we do about a 2-hour consult before we actually get in the car and go look at houses.
We hear a lot of stories about people who have champagne tastes and beer budgets. Erica, have you ever run into a situation where someone had wanted this grand mansion, but they really could only afford a 3-bedroom, 2-bath ranch?
Of course.
And
Yes.
handle those situations.
You know, the first thing I do when I have clients who have those type of tastes, I relate. I'm joking. No, I assure them it's okay. Yeah, that it's okay to have a vision and a goal and a dream in mind. When I have clients who have very specific needs for their homes, I do like to equip them with a little bit of reality, which may not be a heck no, this will never happen, but it might be a not right now. You know, sometimes a blessing is just a blessing delayed, not a blessing denied. So I tell them, you know, that may happen for you, but you need to be ready to buckle up for the long haul. And then I ask them what they're flexible on, because what I realize is people want to know what you can do for them, not what you can't do for them. So when I ask them what they're flexible on, that's when we start to make progress. So yeah, that's how I deal with that.
Very good.
That's how I deal with that.
She's nicer than I am.
All right. All right. So Allison, I'm going to ask you this. How much does someone need to save when they're looking to buy a home?
So, great question. Whenever you're trying to buy a home, first you want to kind of look to see what your budget is going to be. So a lot of times I get asked about down payment assistance programs or seller concessions, gifts, and all of those items. But you want to see, okay, am I trying to buy a $200,000 house? Am I looking for a $100,000 house? Because those are going to be different for each person. So normally, first-time home buyers, they're going to get a FHA loan. FHA loan requires a 3.5% down payment, and that's 3.5% of the purchase price. So if the purchase price is $200,000, it's going to be 3.5% of that $200,000. My company, we do offer down payment assistance where your entire 3.5% can be covered and included in your loan for 100% financing. So if it's a situation like that, then I try to partner with my realtor to see, okay, realistically, this is probably how much closing costs we want to try to get the seller to pay. So it can vary. Usually I like to ask, what is it that you're coming to the table with? And then we can go from there, because someone may have $20,000 saved up and someone may have only $4,000 saved up. So depending on your goals, I like to set realistic expectations based on what you have going on, what your goals are. And then if they're, depending on how the market is it a situation where, you know, closing costs can be paid, depending on the situation. With FHA loans, sellers, they can do up to 6%, but then you also want to be realistic, because your realtor is going to have to put in that offer requesting closing costs to be paid. And is it going to be a situation where you may lose out on your house because you're asking for too much closing costs? So that's something that is kind of like a tag team with the realtor that I'm working with to try to see what we should do when it comes to my buyer's budget.
So, Allison, one more question. Why would someone come to you versus going to a traditional bank? You being a mortgage broker, working for a mortgage broker as a mortgage loan officer, but why would somebody come to you versus going to SunTrust or Wells Fargo?
Well, yeah, so I work for a lender, and there's difference between a lender, broker, and a bank. In order to work for a lender, you have to be licensed. So at Wells Fargo, I used to work for Wells Fargo a couple of years ago, in Bank of America. Those loan officers, they're not necessarily licensed. It does not mean that those are bad loan officers or that, you know, we're better. It's about licensing. It's about the experience, the customer service. Are they going to be diligent throughout the process? That's the main thing that you want to consider when you're trying to go to a lender. So I know that a lot of times I work with a lot of millennials. They might not understand the difference. Like, why would I go to a mortgage company or a lender versus the bank? Banks have different approval processes. They have different turnaround times. Sometimes it might be longer going through a bank as far as the process, and it might be quicker to go through the process with a lender. Sometimes there might be situations where the loan officer might not be as educated because of trainings and things like that they don't have to go through when you are licensed. So it's biased on both sides, but I just feel like I try to give my best customer service, and usually I get referrals. It's all about the relationships that you build with your realtors, the people that you help buy houses, and this is really a relationship business. So once you can educate someone on the difference between a lender and the difference between going to a bank, it's all about preference, to be honest. Like, I try to let people know we all have the same products for the most part. There might be some, like I have down payment assistance program. The bank might not have a down payment assistance program. So I do get referrals from banks as well. It just depends what you're looking for, what your ultimate goal is, and how we can best fit your needs. Sometimes banks, their qualifications may be a little bit more strict. So if you have a better credit relationship with the bank, it might be better to go through a bank. So if that's the situation, I'm not going to talk you out of what's best for you. I'm just going to try to figure out how I can help you.
Great answer.
All right.
Oh, thanks.
So, what were you about to say, Letrissa? I'm sorry.
I said great answer. It was encompassing. It was a good answer.
Oh, okay. All
I
right.
was trying not to be long-winded, but
How do you all? Nah, you did good. You did good. Okay, so a new home buyer comes who has no idea of what to do. How do you? What's the first step? And because I think we have a lot of new home buyers watching. What is the or potential home buyers watching? Like, what are some of the do's and don'ts that you would tell them as far as buying a home?
me.
What's John?
Did you say John?
Yes,
Oh, I'm sorry.
John P.
Okay, did you say the first
Just-
thing that a homeowner will ask the first thing they need to do is call John Peeler, first of all.
Gosh, no.
No. So what are some of the do's and don'ts? Yeah.
You gave us.
What are some of the do's and don'ts that you would advise them
Not
on if they're a first-time home buyer?
Well, really, if they're a first-time home buyer, you know, the client is going to be looking towards you to give them all of the advice that they need and to help guide them through the home buying process. So that's going to be the first and most important thing. And then the first thing that you'll do once you decide that you are going to work with that person, you'll need to get a buyer agreement that says that they're hiring you to work for them, because that's very important also. Because a lot of times you have some buyers, you know, and I don't mean to take it into a negative direction, but it happened to me a couple times. So that's why I push it now. So when you decide that you're going to work for someone and they decide that they're going to hire you to work for them, there needs to be an agreement signed. And we have those forms through our Realtor. And so that's very important to do that. So that protects you and it protects the buyer.
Yeah, so on the buyer's part, though, what are some do's and don'ts that you would advise them on?
Well,
From the buyer's perspective.
From the who? Excuse me.
From the buyer's perspective.
From the buyer's perspective, well, it just seems like that they would be very cautious and to please take the advice of the agent or realtor regarding, you know, the process. It's not really a do and don't, you know, it's really just working together and taking the necessary steps to move you further into the process, because it's all a process.
Mm-hmm. I have some don'ts from a lender perspective that I can share.
Okay, Erica, you speak to that? Oh, go ahead.
Well,
go ahead, Alison.
Okay.
Well, because there's several things. Once you get that pre-approval, we are saying that you're pre-approved based on what you provided to us. So you don't want to make any changes that is going to affect that pre-approval, turning it into an approval. So for example, let's say if you're doing any large deposits, we have to collect your bank statements, no cash deposits. I always tell people, if you're going to be making any large transactions, you need to talk to your loan officer, talk to your realtor if you're going to be making any changes, because we want to know if it's going to affect you in the process in any way. So large deposits, you don't want to do any large purchases on your credit card, because that can increase your debt to income ratio. And that can be a situation where if you are kind of maxed out and you wanted that big house and you don't have any room, that can prevent you from getting your house. You don't want to make any changes to your job. You don't want to apply for any new credit. You want to stay as safe as you can. Like, don't move. Just do everything that we can do to get you to closing. Because if you make any major life changes, don't spend money on furniture, because your closing costs might be a little bit different. You just don't want to do anything that is going to prevent you from getting to the closing table. So consult, be honest, be upfront, be transparent throughout the process. And versus some people are like, well, don't ask, don't tell. You didn't tell me. Well, you didn't ask. But regardless, we have to be in this together. So ask questions and don't make any large financial changes until closing, after closing.
All right.
I have a major do.
Okay, Erica, you want to add to that?
Yes, I have one major do. Do trust your realtor. The realtor you're trusting, like the realtor you're working with, do trust them. That is the biggest part about our profession. Google has a lot of great information out there. All of that information does not necessarily pertain to you and your situation. And while
Thing I would add to that.
sorry.
Yeah, I'm gonna mute myself because it's a stable.
Oh, yes. Yeah, so do trust your realtor. We are here to help guide you through the process. The one thing I do like to tell my clients, and I believe I've told every single client I've ever worked with, I tell them, I'm not here to convince you to purchase a home. You have to decide that you want to be a homeowner. And I'm here to help guide you through that process in the smoothest, most beneficial way, possible to you and your family. So I like to let people know that. I'm not here to convince you to buy a home. It is a huge, huge step for you and your family. But I am here to help guide you once you decide that's what you want. So trust your agent after you do your homework.
All right, Letrissa, you want to add anything?
I think with new homeowners, the things that I see the most is also student loans. Know your student loan debt, know if it's in deferment. If it's not in deferment, have a fixed payment. Know where your taxes are, have filed your taxes. Have an idea of where you're going to get your down payment from. Those are conversations as a realtor that's hard to have because it's money, which is how Alison gets asked the down payment questions all the time. And know that obviously do a credit checkup. You don't want to just wait until it's time to buy to know what you look like financially. I always tell people if there's a lease, you want to talk to me 6 months before your lease is up. If you're moving from a parent's house, we need to look at credit to see what that looks like before. So don't be a poor planner, right? Don't take 30 days and say, oh, I got to be out next month. So we need to take inventory early. So the dues are, if you're thinking of buying a home, consult a professional first. It's not just a ride around, look at houses on a Sunday opportunity. If you're serious, you want to have a consultation as soon as you possibly think about it. So.
Yes.
Alison, any special advice for people who are self-employed trying to buy a home?
Yes. So the main thing that gets people when they're self-employed is tax returns. So I'm not a tax professional, but I do look at tax returns often. And whenever you're filing your taxes and you're self-employed, let's just keep it honest. A lot of times you want to show that you're not making as much money as you are when it comes to paying taxes. So when it comes time to buying a house, you're going to say, I make $120,000 a year or however much you make. You're proud. You're proud of how much you make anytime other than when it's time to pay taxes. And so that's what we deal with a lot when it comes to self-employed. Very proud of how much they make, but then when I have to deter them to their net income and we look at all those expenses that's reducing their income, it's sometimes a shocker because they don't know that that's the number y'all look at. You don't look at gross. So when you're self-employed, it's fine to do that throughout, but just know that we look at your 2 years tax returns when you're buying a house. 2 years. So when you're trying to buy a house, you're like, hey, I need to have this conversation with my tax advisor and I'm going to have to bite the bullet and pay Mr. IRS,
Yeah.
because we have those tough conversations, and they're just like, I didn't know, because all of your life you're thinking, hey, I don't need to let the government know I make all this money. But when you're coming to buy a house, they have to know. That's it.
If you're self-employed, you have to plan
All
too.
right.
2
2
years.
years planning.
Years.
Right. So you mentioned earlier, Alison, you mentioned down payment assistance. Kind of tell us what that is and how that works. Briefly, kind of tell us that.
Yes. So down payment assistance, it is basically assisting you with your down payment. So sometimes I work with Georgia Dream, Invest Atlanta. There are several out there. Currently, I use Chenoa because that one covers the entire 3.5% of your down payment. Some of them might give you $5,000 out there. Some might have a set amount, but this one covers your entire down payment. So you just want to do your research when it comes to down payment assistance programs. Some down payment assistance programs require you to do homebuyer education courses. The one that I offer does not, so that's a good thing. That's why I like using it, because as long as you have the qualifying credit score of a 620 or higher, then you are good to use that program and do 100% financing for your down payment. And we can skip all of the other home buying courses and qualifications that other ones offer. That's pretty much it.
John, interest rates are low right now. Has that encouraged people to buy, or does that even matter to buyers right now? The ones that you come across?
Absolutely, it matters. Absolutely, it matters, and absolutely, it has had a part in driving the market. I just did a closing on Friday. The first time in the history, I think we saw a 30-year mortgage. I think it was like 2.7. I mean, it was unbelievable. Unbelievable. Yeah. Unbelievable.
So, Alison, John mentioned, excuse me, John, 2.7%. Yes. What did that look like a year ago? What is that being compared to when we say interest rates are low?
Well, historical. I mean, they're historical lows. They've never been this low before. You know, they were saying like way like 20 years. I mean, it's unbelievable. It's unbelievable. And that's on a 30-year mortgage. So you have a lot of people who are doing 15-year mortgages, which also come with a even lower rate. So it's, I mean, you can borrow money at a very low rate, and that's good for the buyer. That is good for the buyer. So that's why the market is on fire, because it's a seller's market, yes, but the buyers also have an incentive by having those low interest rates. But let me just say this right quick. A lot of people think that they qualify for low interest rates, but that still depends on your credit. It depends on your credit, what you qualify for. So you still have to be a qualified buyer, and that dictates your the interest rate that you'll be able to get.
Okay. Alison, you want to add to that?
As far as when you were saying, even if you have necessarily bad credit, you're still getting a better interest rate than you would last year and the year before that. So even though, let's say, it might not be in the 2s, which is really great, interest rates are really low, but you know, it's still a good time, because we're getting people with good credit who have rates that was 4%, sometimes even 5%, because they might have done FHA 203K, which is like a renovation loan. So a lot of people are refinancing right now as well. And refinancing, that is when you currently own your own home, but you might want to get a lower interest rate, or you might want to use some of that equity in your home to pull out cash to maybe pay off debt or do some home improvements, whatever you decide.
Okay.
Adrian,
Alison, while I got you, will having a bankruptcy on your credit for being approved? Yes.
So it depends
You
on,
wanted to say something, Erica?
oh, sorry, go ahead.
you can, this is a good question. Let's get this question and then I want to circle back to something like just very briefly.
Okay.
Yes.
No problem.
So it depends on the type of bankruptcy, whether it's Chapter 13 or Chapter 7 bankruptcy. One of them has to be discharged for 2 years. I have to be honest, I'm about to look it up right now. I have it in my message for my notes because I personally, look, I'm not Google, so I have my notes all the time. But yeah, you can still get a bankruptcy. It just depends on the discharge date. So I'll get back to you on that because things are always changing in the mortgage industry. But if you have one, you can still get one. It just depends on how long it's been.
Chapter 7 is 3 years, and in Chapter 13, they can buy with permission from their officer of the court. If the other debts are paid, is what we just had one the other week that happened that way. I don't know if every bank's the same.
Yeah, they have to have a letter from the attorney
From the
saying that they can buy a house. But I want to say it was 2 years because I just had a situation too. And sometimes it's different depending on the lender. So that's why I just want to be sure.
Yeah, the layers are way different.
Okay.
I did want to.
We'll update that on the post. Go ahead, Erica.
I did want to circle back around to some of the don'ts. You know, that question really stuck with me when you asked it a little bit earlier. Another don't, and I think everyone here will co-sign on this one. Don't, for my buyers, my first-time home buyers out there, do not compare your future mortgage payment or your home purchase process with your aunt or your grandmother's or your mother's or your cousins who purchased a year ago. I don't care if it was 6 months ago. Everyone's home purchase process, their portfolio, their profile, their credit profile, everything will look different. It is a fingerprint. Nothing will be the same. And just because they purchased the $250,000 home and they tell you that they are only paying $300 a month for it, I mean, I don't believe that's true, but no one's gonna really sit and divulge all of their financial information to you, even when you think they will. You know, nobody wants to feel like their house poor or they're paying too much for their home or give you too big of a hint of what their credit looked like during that time when they purchased their home. So that circles back around to the trust your realtor, trust your lender. If you need to do research before you choose, your consultations are good for that. Reading reviews, asking around, word of mouth for who you're working with. Their name in the community. You know, that's a big thing. If your agent has a good name in the community you're in, then listen to that, take heed to that. That, you know, that's just one of the things I want to point out. You will talk yourself, you will let other people talk yourself out of your home that you qualified for if you listen to them. Because just because you qualify this month, everything is constantly changing in the mortgage industry, in the real estate industry. That does not mean you will qualify 2 months from now. If you qualify for a down payment program, that program may only be around until the money runs out. It may not be here next month or 3 months or 5 months from now. So you want to be decisive when you decide that you want to be a homeowner. You have to really trust the plan that you have for you and your family.
Yes.
That's all. I'm on
We're gonna, go ahead, Alison.
It's 2 years.
Right.
So my company.
You want to add something, Alison?
With the
I'm sorry, I
bankruptcy.
thought you were about to say something.
Oh, I was just answering the bankruptcy question. It's 2 years for my lender.
On 13 or 7?
7.
It's a credit score requirement.
As long as they meet the minimum requirements. So right now it's 620 for FHA. So as long as they meet whatever our standard is, our minimum at that time, which we used to go down to 580, but as most lenders, it's changed due to COVID-19. So it's 620 right now.
And to piggyback off of that, I had a closing with the 2-year Chapter 7 bankruptcy, and their credit score was a 595. And now, you know, that wouldn't be the same for today. So that's how quickly things change. And that was maybe, I want to say 4 months ago. So.
Yep.
Excuse me.
So, Alison, as of today, that minimum credit score that they should be shooting for is 620. Is that what we're saying?
Yeah.
Hold on 1 second, John.
620 for my company, American Financial Network. We can broker it out. So there are some brokers that can do lower down to 580, but right now the turnaround time for those 580 to 619 is about 60 days, to be honest. So I don't even broker out right now with this pandemic, because as they said, the market is very competitive. So me telling a realtor, oh yeah, your buyer wants a house, they have a 580 score, but it's going to take about 60 days. They're going to look at me like, sure, let's do it.
Then it goes into the black hole.
Right. So 620.
Alison, that sounded like my voice.
I know. Let's do it.
John, you were about to add something.
I had a question. I have some people who are some of the viewers who are sending me questions, and this was a good question. And I thought that we would ask Miss McCarden to expound on it a little bit. Since she's a professional in this area, the question is, when should you use a conventional loan versus an FHA loan? And I figured that would be a good one for you to answer for everybody.
Oh, that's a good question. So FHA loans, those are government loans. So when it comes to the type of house that you're going to buy, you want to make sure that it can pass an FHA appraisal. There might be a situation where you want to buy a house that's as is, you know, might be a little fixer-upper. That can, you know, prevent you if you're trying to go the FHA route. Also, it just depends on your situation when it comes to the down payment. So down payments on conventional loans, they can vary depending on your score, but the down payment for an FHA loan is 3.5%. So conventional, you're a little bit more flexible. You can do between 3% all the way up to 20%, 25%. It just depends. So let's say if you're thinking of getting an investment property, then that might be a conventional loan, because you have to put down either 15% down payment or a 25% down payment, because you're not planning to make this your primary residence. So FHA, normally when I'm dealing with someone who it's going to be their primary residence, they usually get an FHA loan. As long as you don't have another mortgage as your primary residence, then that's typically what they go for because of the low down payment. And also usually with down payment assistance programs, because it's a government loan, you would have to use it towards an FHA loan. So it really just depends on the buyer's situation.
Thank you.
Great answer.
All right, we're going to follow up at a later date with talking about investment properties. Actually just sold me an investment property about a month ago. So that's something that's near and dear to me. We will let you all close out with some closing words. We're going to start with you, Alison, since you're the lone mortgage person on here with us.
Okay,
and we'll end with John, the man who says the market is on fire.
Yes. So one of the things that my motto, I guess, is becoming a homeowner is a lifestyle change, because when you become a homeowner or you make that mindset that, look, I want to own my own home, I don't want to rent anymore, just understand that just like weight loss, just like making a decision to start a business, you have to make some lifestyle changes. So if it comes to creating a budget to save or buckling down, fixing your credit, You have to stick with it. It may get frustrating. It's not going to come easy. I'm sure everyone can attest to buying a mortgage is like this. It's stressful. There are some good days. There are some bad days. There are some days you may want to cuss me out. There are some days you may want to cuss your realtor out. But we have
Don't
to
do that.
Don't do that. We are in this together, and everyone's goal on this call is to get you to the closing table. So even though it may not be a seamless process, just understand it's a lifestyle change. It's going to come with hard work. And by the time you make it to the end, you're going to feel like a pro. You're going to go to your friend and you're going to say, why are you renting? So it's kind of contagious and it's stressful, but come see me if you need me. Follow me on Instagram and Facebook, Chic Mortgage Millennial. I put tips about home buying. You can reach out to me and see what's going on in the mortgage world.
All right. Erica, you want to go next?
Sure. Just to piggyback off of what Alison said, I do a lot of work with Alison. We actually go way back to our college days, but she has taught me a lot since I began my real estate journey. And I just have to say that anyone who is looking to purchase a home, make sure you choose someone that you trust. Make sure you choose someone who you have a matching energy with, and you'll be in great hands. It's a great process. I mean, going through this home purchase journey, everyone can't call themselves a homeowner. But if you have the opportunity to do that, then definitely try and do that. So, yeah.
Letrissa?
Yeah, so obviously piggyback off the other two agents in the call and the lender. I think the biggest part about home ownership is knowing that in our world, it's breaking generational curses. And my goal is to leave no person homeless. So we want everybody to have a house. Home ownership matters. Be a finisher. If you start the process, our goal is to make the non-believers believers, obviously. And know that you're paying someone's mortgage. It should be your own. So I am a social media princess everywhere at Letrissa. I too go live. I do all of the consultations. I own a short sale company. So we handle all facets of real estate. So we'd love to help anybody. We consult for free. And talk to an agent. There is no charge to use us. There's no charge for the lender. Ask the questions. There are no crazy questions. You're in a safe environment. So reach out to one of the professionals here if you have questions. Adric is going to point you in the right direction as well. But definitely, home ownership is just as close as buying a car. It's not a hard process, and our goal is to make it super simple for you. And thank you, Adric, for doing this. I think it's important, and you have a platform that you're using, and I congratulate you for doing that because people need to know more about this. It's super easy to do. So thank you for doing this.
Yeah. John. Thank you, Letrissa. John.
Oh, thank you. I'm sorry, I'm having some audio technicality. But anyway, I do want to, first of all, we have to thank Mr. Adric Ingram for this wonderful platform, and not only this one, but just all the times that he comes and creates a platform to, bring awareness. This is home ownership is a wonderful thing, and if you don't own a home, if you that's something that you need to do in your life. It brings a lot of wonderful opportunities and a lot of different avenues from your life, and I would love to be a part of that. So if you're watching this live today and you're looking for a realtor and you're thinking about becoming a homeowner, give me a call. I would love to assist. I've been doing really, really well. I have over 25 years customer service experience and sales experience, and that means a lot to people. That means more than a lot of other things that I possess, but having that customer service and providing that real good quality service and personal experience with the buyers and sellers, it makes a huge difference. So thank you again, Adric, and I enjoyed myself, and it's a pleasure meeting all of you, Miss Alison and Miss Letrissa.
Yes.
You all please send me your contact information so we can have each other in our contacts.
Absolutely.
Definitely.
Absolutely.
All right, we'll make sure that all of their contacts are listed on our on my page, so that
Thank
you
you.
can contact them if needed. We want to thank you all for all that you do. I know it's not always easy peasy with dealing with certain clients, but we just thank you for giving great service to all of the clients that you do reach. And we thank you for joining us tonight. We thank everybody else for joining us. The watchers, on next week, we will have our Class A championship, state championship high school boys basketball team from Central High School. They'll be with us, so please and celebrate with them and celebrate them with winning their championship. Thank you all. Go buy a house. See these people right here, and we'll see you all next week. Have a great night.
Bye.